Oil holds near $121 as investors weigh tightening markets. Oil traded close to $121 a barrel as traders weighed a decent supply outlook and the impact of China's eventual return from virus curbs. Supplies continue to be an awful lot tighter than at some point of different recessionary durations, and expenses should resist a probable economic slowdown. Oil historian and S&P Global (NYSE, SPGI, Inc.) Vice Chairman Daniel Yergin said in a television interview, West Texas Intermediate fluctuated after final 0.2% better on Monday, shrugging off a broader market rout following in growth in U.S. inflation. Crude has rallied approximately 60% this year as an economic rebound coincided with upended change flows after Russia's invasion of Ukraine. While China is going through a bumpy go-back from strict COVID-19 lockdowns, growing intake from the top importer will stress the market in addition and drive expenses better. Russia's war in Ukraine has exacerbated a tightening of the crude and fuels markets, and fanned inflation international. The deliver scenario is razor skinny, stated Yergin, including that main manufacturers Saudi Arabia and the United Arab Emirates don't have sufficient spare capacity to make a massive distinction. Fundamentally, the outlook stays constructive, given the tightness, said Warren Patterson, head of commodities method at Ingrop as Inga NV in Singapore. A tighter market additionally manner the potential for accelerated volatility. Some Asian consumers have been snapping up Middle Eastern oil in advance than ordinary inside the bodily market, in a sign of sturdy demand. The spot buying activity, which usually selections up tempo after the release of respectable promoting charges, commenced even earlier than Iraq, Kuwait and Iran had made their announcements. Falling Libyan output is putting strain on light sweet oil markets. On Monday, the North Sea's Brent, 1940s and Ekofisk grades were all being bid at better tiers than Friday, whilst 40s traded at its maximum in over a decade. Brent's nearest futures contract become trading greater than $3 above the subsequent month, a top rate that suggests scarce supply of the crudes that underpin the worldwide benchmark, which includes those from the North Sea. Copyright 2022 LP.